Good morning. Welcome to IG's early morning call. It's Tuesday, 27th of June. Let's take a look at the headlines. We're awaiting the start of today's European markets in half an hour's time. We're looking for a mixed start, probably on the upside for some indices, but we've got techs on the way down, broadly speaking. We saw a big decline yesterday on the tech sector. US indices down across the board. Tesla, one of the biggest decliners after Goldman Sachs downgrade on the stock. In today's session, we're looking at the Canadian dollar ahead of some key inflation data, which has shown some signs of slowing down. It certainly seems like the Bank of Canada has got the better of inflation. And Walgreens Boots Alliance. We're watching the US company producing earnings later on today and asking the question, what about Boots? Where's it go with that stock? Is it going to remain part of the core business of WBA? Take a look at volatility. Bumping along the bottom, no change really from what we've been talking about the last few days. We are got a red candle today at 1628, and this continues to mean that I think the equity markets are finding they're going tough. We are expecting a slightly stronger start to the London markets today. This is a green candle on a daily candle. I want to show you the 30-minute chart just to show you where we closed out yesterday's session. You can see, and I think this is one of the better performers, it has to be said, on the European markets. Looking into the start of today's trade, there's a bit of a recovery underway there. Yesterday, beg your pardon, in the 30-minute candles, we've got a fractional break of the 200 period moving average. This is a 200 30-minute candle moving average. So it's not significant. And I think if we go back to the main chart, you can see in the context of where we are in the markets, it is just a bump off the bottom. Yesterday, we saw an intraday trade, the lowest that we've seen on the London markets on the FTSE 100 since the 24th of March. And then came a rebound, driven in part by some areas of the market. We've got some relatively strong gains in some of the Asia-Pacific markets. Let's take a look at what's been happening in other markets across Europe. We've got a bounce off this 76.4% retracement on the German DAX. I was talking yesterday about the weakness in the IFO report. We've got GfK consumer confidence, we've still got retail sales, we've still got other data out in the German economy, which many are pricing in further weakness because of the difficulties the German economy has found in finding its floor. But we have got a rise today and looking for a stronger start when things get underway in half an hour's time. French market's not well, I say not quite the same. Yesterday we saw an intraday print not seen since the 1st of June. But in fact, as things start at the moment, we're now looking for a stronger beginning. Just a couple of hours ago, I was looking for a slightly weaker start to the trading day today. But in fact, we've got a little bit of upside. And in fact, Accor is one of the interesting stocks to watch out for in the French markets. And I'll cover that in just a couple of minutes' time on the news that we've seen out there. Overnight in Asia, as I said, broadly speaking, it's been a day where we've got some interest in Chinese stocks. Hang Seng Stock Index up 1.75%. Also, some gains in the Australian benchmark. There's a sort of underlying close relationship between what happens in China and the Australian markets. Australia's S&P ASX are up to 2/3% for the benchmark index. But you can see there the Nikkei on the way down. Let's take a look at what's been happening on Wall Street. Tech sell-off yesterday. I think that's the message I want to give you yesterday. NASDAQ Composite down almost 1.2%. Alphabet, Meta Platforms, Nvidia all down in excess of 3%. Tesla amongst the worst performers. I'll cover this in just a minute's time. The stock was downgraded by Goldman Sachs. Also, global consulting firm AlixPartners released its 2023 Global Automotive Outlook yesterday. The message is simple. The auto industry must radically change if it wants to compete with Chinese players. We're talking here mostly about electric vehicles. And electric vehicles tend to center themselves around the technology sector. According to this report, Chinese brands are poised to become the shaping force of the global automotive industry in the coming years. Talking about techs, let's take a look at what's been happening with the NASDAQ. Talking about that decline yesterday, but in fact, in the grand scheme of things, it is only a small retracement still on this market. 14,749. I get a little bit more prepared for a short trade if I saw a print below this 14,294. And that would then build us up, I think, into what would then be possibly further downside to come. At the moment, at least, as I said, it is just a small retracement in the wider scheme of things. So it seems that the stunning rally in Tesla shares may now finally be over, certainly for the time being at least. The rally took the shares to the $1 trillion level, prompting some analysts to question the valuation and coming through with a downgrade in the stock, which is what we saw yesterday coming through from on the Tesla stock from Goldman Sachs. I want to show you the share price chart because we've seen some relatively hefty candles on the way down. This blue box represents the move that we've seen since the beginning of the year. In fact, the year started negatively, but we've been up 127% since the very first trade in 2023, up to the recent highs that we've seen on the stock, taking us up to those highs on the 21st of June. Since then, there's been a little bit of air taken out of the tires of Tesla stock. Yesterday, Goldman Sachs cut Tesla to hold, equivalent rating, joining Morgan Stanley and Barclays, which downgraded the stock last week. The brokerages, however, they all raised their price targets to reflect the momentum in Tesla shares, but all those price targets are below where we are. I wanted to show you this because I think there's a couple of interesting things happening here. We've got this coming together of all these moving averages, the 50, 100 and 200 period moving average. The 50 has now gone above the 200 period moving average. There's this death cross that we've seen in this stock, and that coincides as well with what we got here down at the bottom with the MACD, the moving average convergence divergence indicator, something that I follow a lot of. And when you get this passing in this direction, this is on the way down, obviously, with the blue line coming in now down below the red dotted line, which gives us a little bit of a red histogram down here. When you see that happen, that crossover, look what happens to the stock. You see declines. Every time it happens, declines coming through, and every time this is always the case. So the big question is how much further downside is there to go on Tesla stock? Certainly, we've seen a tremendous rally this year, as I said, more than doubling in the stock since the beginning of 2023, and people think it's time to sell. So that's what they're doing at the moment. 240.77. This is an all-session stock. It opened at 9 o'clock this morning on the IG platform. British shop price inflation slowed this month, according to the British Retail Consortium, the BRC. The group says that prices in supermarkets and retail chains rose by 8.4% in June compared with the same month last year. In May, annual increase was 9%, which was the highest rate since the BRC's records began back in 2005. Look, these numbers are still big, but nonetheless, there are declines across the board. Food prices slowed, but still rising 14.6%, an increase that continues to represent a big strain on the households of many families. But for BRC Chief Executive Helen Dickinson, she said that if the current situation continues, food inflation should drop to single digits later on this year. Now, last week, as we know, the Bank of England raised interest rates, surprising investors by a 50 basis point upside. Economists had been warning that this was a threat. That's now taken its main base lending rate to 5%. The argument is simple. Britain is facing stubbornly high inflation that will take longer to fall. Now, since we've seen that report from the Bank of England last week, Reuters has come through with a poll. The verdict is that a majority of economists now think the Bank of England will deliver a further 50 basis points during the next quarter in the form of 2 hikes of 25 basis points each at its August and September meetings. In a previous poll made only 2 weeks ago, policymakers were expected to draw a halt at 5% next quarter. Clearly, inflation remains a really big problem for the Bank of England. I want to show you sterling against the US dollar. This line at 126.79 is on this chart here because it was the line of resistance achieved back on the 10th of May, and it's now acting as support. Now, assuming that the Bank of England does go through with these expectations of a further rise in interest rates in the next quarter, and many are still pricing in a further 50 basis points as well to come some point to either towards the back end of this year or the beginning of next year to quell inflation, which many consider is something that will continue to remain for some time to come. The current trade at 127.44. If you're long on this going into the session today, your stop goes underneath this line of support around about the 126.70 level. Sterling against the euro. Well, that's a little bit different. We've seen sterling rise, but it's now started to find a level at the 116.60 level. You've got to bear in mind the European Central Bank is raising interest rates as well to calm inflation across the Eurozone. We're watching data out later on today in the Canadian economy for consumer price inflation. The CPI is expected to rise 3.4% in May year on year after a 4.4% increase in April. So it is slowing down. Core CPI is also forecast to decelerate to 3.9%, which is higher than the headline figure, signaling that the broader inflation is taking time to cool down. A point that really preoccupies the Bank of Canada. At its last meeting, Tiff Macklem, he's the chief of the Canadian Central Bank, his team unexpectedly raised the target overnight rate by a further 25 basis points to 4.75%. Policymakers there saying they were concerned that inflation could get stuck materially above the 2% target, and said that that will continue to assess the dynamics of core inflation as we see that to continue. The USD CAD price change. Let me just bring up a chart of what's happening with the dollar CAD to show you what's been going on. And the Canadian dollar has been on an absolute rip recently. This is the US dollar falling against the Canadian, and it is down again today at levels not seen since the 12th of September last year. What happens today? Well, if you're short on this and you think this is a trend that's going to continue, your stop goes above the 132 level. We're trading at 131.21 with a view possibly to see that go down. That being said, the MACD is looking as though it wants to start to bottom out. Could we see some levels reached where we see enough done for the Canadian dollar's upside, and we see a return to some sort of performance for the US dollar against the Canadian? 1:30 p.m. today, we'll see that release of the Canadian CPI data. Also later on today, we've got some data out in the US, which could affect the dollar side of that trade. 1:30 p.m. is durable goods. The consensus there is for a May figure of a -1%. It's a very volatile number, as I say every month when it comes through, so we could equally expect something positive. It may not necessarily move the markets that much. S&P Case Shiller Home Price Index out half an hour later. The consensus is for an April reading of a -2.3% year on year. And further 60 minutes later on, the Consumer Board Consumer Confidence number out for June. The consensus is a reading of 103.7. This is the euro dollar trade. We're up for a second day in a row at 109.29. Now let's take a look at some of the data out across the European corporate news headlines. We've got some data coming through from Accor, one of Europe's largest hostelries or hoteliers. It's raised its outlook and forecast its 2023 revenue per room RevPAR to grow within a range of 15 to 20% amid its reorganization plans. Now, we know that a lot of these companies in the hospitality industry have been doing some really brisk upside business. I want to show you the share price chart because we've seen recent highs in the stock. We will be opening at 32.64. The industry generally has benefited from higher prices and a rebound in travel demand in the wake of the pandemic, with a lot of pent-up demand, consumers rushing to travel, even as rising interest rates are stoking fears of a recession, and inflation continues to eat into household purchasing power. I want to talk about this chart in just a few moments' time, but I think bearing in mind where we are, Accor now expects full year earnings before interest, tax, depreciation and amortization, that's EBITDA, to come in the range of between 920 and 960 million euros. Now, that is better than had been previously forecast. So potentially we do see an upside here to the trading pattern. Now, I've drawn this upside facing wedge. This is a bearish wedge pattern. Yep, bearish. What I think could well end up happening is that we might end up getting a positive result out of this morning's fundamental news. But I think what happens then on a wedge shape pattern in this direction, I call it a bearish wedge because it resolves on the downside. So you measure the height of the pattern and then you get your projection. And technically, this should, in theory, break on the downside. And then when you measure your distance between the top and the bottom of the pattern, wherever that is, you can then take that, copy that, and you get your projection down from where you are. So let's just take, this is a rough sort of thought of where we could well end up. We could well end up potentially resolving this pattern on the downside, the point of what, 28.58. Which were the lows we saw back on the 5th of April. But that doesn't hold in line with the news out today. Something else I think it's worth mentioning, this MACD down here yesterday, we saw the blue line pass below the red dotted line. And I go back to what I was saying about Tesla. When you see this happen, you get downside in the stock. Sometimes it's not a particularly deep downside move, but nonetheless, it does mark momentum changing its direction and people looking for a reason to sell this stock. But I think today, fundamentally, potentially this could well be a positive stock story. I want to stay on the charts because I think it's worth looking at another company that fell heavily yesterday. And I think there could be a little bit of an unwind in this stock at the start of today's trade. This is Carnival Cruise Liners. I think we ought to watch out for a possible recovery in this stock today. Cruise operators generally suffering a really big loss yesterday because of this drop. Like other tourism businesses, Carnival saw its shares rise sharply in the last 2 months, but yesterday's announcement sent them down 11%. Now, these disappointing expectations are not due to a drop in demand, but stickier than expected inflation, port expenses, freight, crew travel, and elevated labour costs have all pushed the company to raise its cost outlook. And we saw other companies coming through. Norwegian Cruise Line Holdings, another one where we saw a drop during the European session in yesterday's trade. What I want to do is I want to switch on to Carnival because, in the US cruise line business, because we saw a recovery late in the session today. And this is why I think potentially we could well get an unwind of some of yesterday's downside for Carnival. This is Carnival in the US markets recovering late in the session yesterday. And I think there's another one I wanted to take a look at as well. Yeah, this is the one here. This is Royal Caribbean Cruises, another US stock. And it fell heavily yesterday and then came the recovery. Now, this gapped down and then recovered, which is why it's a green candle. In fact, it ended down just 2/3%. But I think that's one of the reasons, as I think, going back to what's been happening with Carnival in this market here, potentially I see a rise in the stock at the start of today's trade. If you do take a long position, unless your stop goes below the 950 level, and with a view to taking it up after yesterday's losses that we saw during the European session. Another stock that could be active today is Walgreens Boots Alliance. It's reporting before the bell today. And whilst earnings are going to be interesting, quick look at what we're expecting there. $1.07 in terms of the numbers for the most recent quarter on revenues of $34.2 billion. But I think investors are waiting more for an update on the future of Boots. It all started 3 months ago when it was reported that investors and board members at Walgreens Boots Alliance were pushing for a breakup of the global pharmacy business to refocus on the group's domestic market. Let's bring in the share price chart at this point, because we've seen a lot of downside pressure build here. And you can see, in fact, we're not too far away from recent lows. Those lows in the stock of Walgreens Boots Alliance were the lowest trade we had since the 14th of June. Since then, a little bit of recovery, but today could be key. Boots has had a number of owners throughout the years. It was established in 1849, and that's been part of Walgreens since 2012. Let me just quickly wind the clock back here to show you where the company was at the point at which it bought the stock, and that was the low point we saw. Since then, the company Walgreens Boots Alliance has benefited from Boots. It will be the second time Walgreens has tried to sell this chain. It tried 18 months ago with a price tag of $7 billion. But the sale was called off in June last year after failing to find a suitable buyer. Could that be the case again? If so, potentially, I think possibly we could well end up seeing another big disappointment, which ultimately might well end up taking shares below this line of support that we've got here. Let me just take that off there so that we can see what price to watch out for on the downside. We're opening at 31.60. 29.47 is the line of support we saw achieved back in May this year, the low point in Walgreens. I'm afraid to have to say the direction of travel here does not look particularly good technically. Let's just quickly wind up and take a look at a couple of other areas of the market. Yesterday, I was talking about a gold trade and this bounce off the 1910 level, and that's worked out nicely, but I'm yet to be convinced there's much further upside for the price of gold. You can see if you look at this chart here. Whilst we did rise yesterday, we're flatlining at the moment at 1925. If you do get a break of this 1910 level, the candle closed below, the next price target is then down here at 1870.4. And the price of oil, well, not really much to talk about, to be brutally frank with you. We've been flatlining over the last couple of days. This is US crude at 69.83. That's it from me. Do watch out for some of those European stocks to watch at the start today. I think I'm looking positively on the beginning of today's trade for Accor Group. And also, as I said, a little bit of an unwind in the Carnival shares. We saw that drop of 11% yesterday here in the London markets. That's it from me. We're back at 10:30 with Charting the Markets.